Before I get into the questions, I think one thing that stands out for me is really the fact that disparities and dislocations in the market can actually create opportunities, especially for contrarian investors like ourselves. The first question comes from Colin. Colin is asking Tim, what is your inflation outlook and how will it impact investment decisions in the medium to long term?
Yeah, thanks for that one. So we've been worried about the upside risk to inflation for a while, both on talking from the Allan Gray local side and Orbis on the foreign side. And Ben talked about some of the drivers. So obviously all this, looking back over the last few years, all this unconventional monetary policy we've had, more recently, all the fiscal stimulus we've seen, especially in developed markets. And then some of the things more on kind of a ground level. So an interesting one maybe is ESG. So obviously we all, everyone agrees kind of the world needs to go to renewables and drill less oil and all these things. But a lot of the kind of thinking and policy making around some of these issues, sometimes doesn't recognize kind of the reality. So, a lot of people have been pushing for, no new exploration of oil and gas, for example, which is, a kind of a noble objective. But in the short term, it has meant that oil and gas prices have gone up a lot because there have been shortages. So a combination of these kind of factors, the fiscal and monetary things I've mentioned, we've been worried about the upside risk to inflation for a while. And it's hard to say in the short term what will happen. So obviously inflation has now been high for about 6 months. It's been kind of 6-7% in the US and in Europe, so very high levels versus what we've seen over the last decade. Will this continue? It's hard to say. I think there's a reasonable chance it might. So I don't know if we'll have 7% inflation for the next 5 years, but it could stay at higher levels than we used to for quite a few years. And what would that mean for our portfolios? So I think we're reasonably well positioned for that, both on the local side and on the foreign side. So Ben mentioned some of the examples. So some of the oil names we own, for example, the banks that will benefit from higher interest rates. I think we should do better than most in a kind of a high inflation scenario.
Okay, perfect. Thank you. On the topic of oil and gas, and of course, the Russian-Ukrainian crisis has been quite topical of late. So Martin has asked, what is your views on the Russian-Ukrainian sanctions and oil price given Allan Gray and Orbis's large oil and gas holdings?
Yeah, it's an interesting one. It's very hard to predict these kind of macro things. So, people who've followed Allan Gray and Orbis for a while would know our philosophy is very much we focused on bottom-up stock picking. So we're not starting with the macros and trying to predict who's going to invade who and these kind of things. Of course, we look at it and we consider the environment and all these things, but it's definitely not the main thing we do. We're focusing on the individual companies, and then we try and build a portfolio which will do well in different scenarios. Because, one can think about these risks like Russia and Ukraine and what's going to happen, and it almost seems a little bit binary. But then, every so often the big risks are actually the ones you didn't think about, the things that come out of left field, right? So you have to worry about those kind of things as well. And how do you protect yourself in your portfolio versus the Russia risk or versus these kind of potential, the next COVID or the next European debt crisis or whatever it might be. So the way you do that is you build in a margin of safety, right? You buy companies which are good businesses and trading at attractive valuations that should do well, sort of regardless of what happens. And then you make sure you're not overexposed to any given risk. So, for example, for Orbis, more specifically, they own some Russian stocks in the portfolio, and they have over the history, and they obviously limit the size of that position, just because it's a little bit of an unknown what might happen with sanctions. But maybe to just directly kind of answer the question, it's hard to know what will happen. It seems like there's a reasonable chance something might happen in Ukraine. If it does, there's a good chance oil prices go up, which I think, we should do reasonably well in that scenario. But a lot of unknowns in that answer, I think.
Thank you. And another question that came through on the Orbis side is, why did Orbis performance not rally more when value-style investing outperformed growth investing?
Okay, yeah, so part of the answer is, of course, that Orbis is not a pure deep value manager, right? So they definitely have a bias towards value stocks, but they do own some more kind of growth type stocks as well. So, in this last kind of few years where value has done poorly, if we kind of do our internal benchmarks and compare Orbis with other value managers in this kind of downtrend, they probably did similar or better to other value managers. And then when value recovers, or there's kind of a month where value does really well, then Orbis obviously wouldn't do as well as the most extreme kind of deep value manager. So that's part of the answer. But I think the bigger reason is maybe yes, we've had this recovery in value. And, Ben mentioned the numbers for January, for example. Obviously, it's a very short period. Orbis did very well in that month. But on a kind of a broader scheme, the recovery in value has been quite small, right? So we had a very long period where value as a style has underperformed. And, yes, it seems like there may be a turning point and value has done well over the last few months. But it's we're still only starting to recover sort of this trend. So if we're moving into a new paradigm where growth does worse and value does better for all kinds of fundamental reasons, you could see that carry on for quite a while. It's not going to you're not going to recover that underperformance overnight. So I would say, yeah, watch the space.
We have one stock-specific question on BTI. So BTI is quite a large holding in both Orbis Global Equity as well as Allan Gray funds. Can you comment on this concentration in terms of the BTI exposure?
Okay, yeah, so it's something we definitely monitor, right? So BTI is a big position in the Allan Gray funds, and then within Orbis, they hold it as a large position as well. And conceptually, when you have this overlap, there's obviously a risk that you end up with a position size that's bigger than what you want. So that's, for sure, that's something we monitor and we keep a close eye on it. And when it gets too big, obviously you can reduce it on the one side or on the other side. I'd say at the moment we definitely pretty far away from that. So just to give you some numbers, in the Allan Gray Balanced Fund, if we just look at the Orbis portion of the fund, BTI is about 3.5% of the Orbis fund. So not of the whole, of that portion. So what does that equate to for the whole Allan Gray Balanced Fund? It's an additional about 0.7 or 0.8% that it adds as a percentage of the entire fund. So it doesn't really add that much. So we're still very happy with the overall position size. From an investment view point of view angle, it's, I think, reasonably encouraging if the Allan Gray team and the Orbis team are independently doing their work, and they're both finding this stock attractive. Obviously, Orbis has a larger universe they can look at, but they also think BTI is attractive. It gives us sort of a different angle that can kind of check our views, which is useful. We can discuss it with them, compare it to other tobacco peers. So it's useful from that point of view as well. And yeah, we're very happy with the position size.
Right, thanks for that. The next question is from Londiwe. Londiwe is asking, Tim spoke about how platinum miners are still a good investment in the short term, but can we expect to get the same returns they delivered in 2021? For instance, ArcelorMittal was up over 700% in 2021. Are there sectors, stocks that you think can repeat this kind of performance?
Okay, yeah, so a few things in that question. So on the platinum miners, I would say one has to be selective. So I mentioned that we think platinum prices are quite high. I wouldn't just blindly buy the entire platinum sector. Some of them are trading on attractive valuations, and you obviously have to form a view on how long you think these prices can last. The client who posed the question mentioned ArcelorMittal, so I presume they're referring to sort of some of these commodity-related companies that have done well more broadly. So obviously we saw a lot of them doing very well last year. I think so ArcelorMittal was up something like 6 or 7 times last year, like a very big number. So a lot of when you see these big kind of moves, it's often because the base was so depressed, right? So because we were coming out of COVID, and when you have a company that has very high operational leverage, very high gearing to prices, and it has debt on top of that, you can have big swings. So last year for some of these companies, especially some of the mining companies, people thought they were going out of business, and clearly that's not the case today. So I wouldn't expect kind of that magnitude of move from here.
Thanks, Tim. We have 4 minutes left. I'm going to squeeze in maybe 2 questions. John asked, the early stages of a rising rate cycle is often not bad for equity markets. To what level can the Fed raise rates before markets react very negatively?
Yeah, that's a very interesting question. I guess time will tell. The one thing I would say is, so if we think back a few years, I think Dr. Tabi also referenced the taper tantrum when the Fed, wanted to start reversing all this monetary policy and, talking about raising interest rates. The market had a very big panic in quite a short time. So often with these things, you can kind of you raise it a little bit, everything seems fine, and you get a tipping point where suddenly, everyone kind of panics. So it's hard to predict where that point is. And then just remember there are 2 things happening here, right? So we've had this unconventional monetary policy where we've had extremely low interest rates, but then we've also had central banks doing quantitative easing. So both these things need to reverse. And we don't really have historical precedent to look at here. One, because we haven't had interest rates at zero for such a long time, ever. So there's not, you can look at past hiking cycles, but it's not exactly the same thing. And we've never had central banks with balance sheets, at this magnitude, given all the quantitative easing that has happened. So we're a little bit into new territory here. It's a little bit uncertain sort of how markets will react. But what does that mean for us? For sure we think about it and it's something we consider. But to be honest, it doesn't affect our day job that much. We're still just trying to find companies that we think are attractive based on their fundamentals, and we're not worried too much about what the Fed will do and how other people will react.
Thanks, Tim. I'm squeezing in one last one. How will decarbonization impact asset allocation, particularly in commodity-driven countries like South Africa? That is a question from Tlamelo.
Sure, yeah, that's quite a tricky debate here. So I think similar to the comment I made earlier, many people agree on kind of what the end goals or objectives should be. Like we should have decarbonization, we should have more renewables, we should worry about global warming. So, these are kind of things which most people agree on. But then on the pathway, there's a lot of disagreement. You can just look at different countries that, for example, the EU and the US and China, they've got very different views on kind of the pathway that needs to be followed. And emerging markets often make the argument that, we haven't emitted that much compared to the US and Europe. And now you're telling us we have to close our coal power stations and use money we don't have to build solar and wind power. So those are typically the arguments from that side. And you can understand the different points of view. And for countries, like SA, we've got additional things to consider. So, yes, we're extremely dependent on coal power, which is a very dirty form of power generation. And obviously that's something we would like to change. But then we also have very serious fiscal constraints we're facing. Plus, we've got a big coal mining sector that employs a lot of people. So, you've also got social elements there to consider. So it's often where you have these ESG issues where, the S and the E, for example, are in contrast. You've got social issues and environmental issues that you need to balance. And I don't know what the answer is, but I would say it's not a simple answer. So if people say, we should just obviously do this, it's so clear and it's a no-brainer, I would disagree with that. These are very tricky, nuanced issues that need sort of a lot of debate and a lot of very clear thinking about.
I think we probably need more time to just talk on ESG. But thank you so much for answering all our questions, and thanks for everyone who submitted their questions.